Your tax refund might be costing you thousands in lost wealth. You get excited every spring. That text message arrives, and suddenly you're imagining what you'll do with your tax refund. New car? Vacation? Debt payoff? But here's what most people miss. That refund is not a gift from the government. It's your own money that they borrowed all year without paying you interest. While you waited, they used it. The wealthy understand something that keeps them ahead. Never give free loans to anyone, especially not the government. Every dollar refunded is a dollar that could have been growing in your account, compounding, building toward real wealth. This video breaks down the hidden cost of that refund and shows you exactly how to stop leaving thousands on the table. Most people celebrate getting a tax refund. But think about what's actually happening. When you get a refund, you're getting money that belonged to you the entire year. The government took it from your paychecks and held it without paying you a single penny in interest. Meanwhile, that money was sitting in a government account earning nothing for you. Let's put a real number on this. Say you get a $4,000 refund every year. That's roughly $330 a month withheld from your income. Over 12 months, even in a basic savings account at 3% interest, that money could have earned you $40. But it didn't. It sat dormant, helping the government's cash flow while you got zero return. Now multiply that over 10 years. $400 in lost interest. Over 30 years, $1,300. That's not even accounting for compound interest or investment returns. Most people think a refund is free money. The wealthy know it's the opposite. It's money you earned that you're letting someone else use. Here's the uncomfortable truth. Every person who gets a refund is essentially giving an interest-free loan to the federal government. Think about what that means. If you walked into a bank and said, "I'd like to give you my money for an entire year, and I don't want any interest back," they'd think you're insane. Yet that's exactly what happens with overwithholding. The government is one of the largest beneficiaries of this practice. They manage billions of dollars in collective refunds every year. Money that people have already earned. Money that belongs to workers and families. The government gets to use it for budgeting, spending, investing, whatever they need. And the person who earned it? They get it back a year later. No interest, no compensation. Financial advisor data shows that roughly 70% of Americans overwithhold on their taxes. That's hundreds of millions of dollars sitting in government accounts, earning nothing for the people who earned it. Some of that money could be going toward your emergency fund, your investments, your debt payoff. Instead, it's being held. The wealthy structure their taxes to avoid this trap entirely. Let's talk about the real cost in terms of wealth building. This isn't just about missing $40 in interest. It's about opportunity cost. If that $4,000 annual refund was instead in your investment account, compounding at a realistic 8% annual return, here's what happens over time. In 5 years, that money alone grows to nearly $23,000. In 10 years, almost $47,000. In 20 years, over $180,000. That's not even adding more money each year. That's just the power of compound interest working in your favor instead of nobody's favor. Now imagine if you adjusted your withholding, got that money monthly, and actually invested it consistently. The growth becomes exponential. This is why the wealthy never let their money sit idle. They understand that every dollar has the potential to work. Every dollar withheld is a dollar not working. When you get a refund, you're celebrating money that should have been building your financial future the entire year. You're celebrating lost wealth growth. If you want to understand wealth, watch what rich people do with their money. The wealthy have a completely different relationship with taxes and withholding. They don't let the government hold their money interest-free. They work with accountants and tax strategists to ensure every dollar is accounted for and working. They know their numbers exactly. They adjust their W-4 forms to minimize refunds. Some structure income as business owners or use investments specifically to offset tax liability without overwithholding. They understand that refunds represent a lack of financial precision. A refund means you didn't calculate correctly. It means money was idle. Successful people optimize for velocity. They want money moving, working, compounding. They also use that cash flow for tax-advantaged investments. $1,000 monthly instead of waiting for a $4,000 refund means 12 opportunities to invest, not one. 12 compounding periods instead of one. The wealthiest understand tax strategy as a core wealth-building tool, not an annual surprise. They never celebrate refunds because they've already planned to not have them. There's a psychological reason refunds feel so good. It's called mental accounting. Your brain doesn't register the daily withholding from your paycheck as much. You never see that money. But when the refund arrives as a lump sum, it feels like a windfall. Your brain releases dopamine. It feels like a bonus. But it's not a bonus. It's your own money returning to you. The government and tax system actually rely on this psychological trap. They know most people won't adjust their withholding. The inertia is powerful. People don't want to deal with tax forms or calculations. So they let over-withholding happen and enjoy the feeling of a surprise refund. Financial companies actually study this. They know that lump sum returns feel psychologically different from gradual income increases, even when the total is the same. This is how they designed the system to work. The money that could be compounding in your account feels like extra fun money instead of what it actually is, your deferred wages. Understanding this psychology is the first step to breaking the pattern. When you recognize the trap, you can escape it. So how do you fix this? Start with your W-4 form. Most people have never touched it. But adjusting it is the single most powerful action you can take to reclaim your money today. You can claim additional allowances or adjust withholding to reduce what the government takes from each paycheck. The goal is to break even at tax time, not get a refund. Use the IRS withholding calculator online. It takes 15 minutes. Input your information and it tells you exactly what to claim. If you're freelance or self-employed, the math is slightly different, but the principle is the same. Pay what you owe, nothing more. Set up a separate high-yield savings account with that reclaimed money. When you get $300 extra a month, commit to keeping it invested. Not spending it, investing it. This turns that freed-up cash into real wealth growth. Start with a month or two to adjust psychologically, then set up automatic transfers to investments. Finally, educate yourself on tax-advantaged accounts. IRAs, HSAs, the right deductions. Knowledge here is literally money. A $500 tax deduction you missed is real wealth left on the table. The path to wealth doesn't start with waiting for refunds. It starts with precision. The shift from celebrating refunds to optimizing your tax withholding is bigger than it sounds. It's actually a fundamental shift in how you think about money. It's the difference between reacting to money and controlling it. Between letting systems work on you and working with systems intentionally. Every time you adjust your withholding, you're making a choice to keep your money working for you instead of waiting. Every month, that extra $300 compounds. Every year that refund never arrives is another year your money builds wealth. This isn't complicated tax loopholes or risky strategies. It's simple financial literacy. It's understanding that your refund is a symptom of a problem, not a solution. The wealthy know this. That's why they stay ahead. They don't celebrate government loans. They don't leave money idle. They don't let psychology trick them into celebrating what's actually a wealth-draining habit. Your path forward is clear. Adjust your withholding. Keep your money invested. Watch it compound. The government doesn't need your interest-free loan. Your future does. Your tax refund isn't luck. It's a missed opportunity that repeats every year. But now you know exactly what's happening and exactly how to stop it. Adjust your withholding. Keep your money working. Watch it build into real wealth. The difference between getting a refund and investing that money over decades is hundreds of thousands of dollars. That's not theoretical. That's your actual financial future. Stop celebrating government loans and start building wealth instead. If you want more videos like this, subscribe and follow Wealth Logic. See you in the next one.